compliance experts with us in this panel today. First of all, I'd like to introduce Salvatore Vitiello. I hope I pronounced that correctly.
Very well.
From Campion Willcocks. He's a compliance executive. And by the way, Campion Willcocks is a leading sponsor for the Regional Finance Conference. And they're also a leading firm in the AML and the financial crimes area in the region. Their head office is located in London. Mr. Vitiello has 10 years of experience in compliance and financial crimes with significant industry qualifications, CAMS, ICA. He has extensive experience in delivering end-to-end projects in the wider AML FC space across different jurisdictions, type of institutions, and AFC functions. He held a wealth of roles across the first and second line of defense, acting as SME and PM in areas of KYC, AML, correspondent banking, MI, and RegTech. He has worked on different AFC projects for banks active in the MENA region, so he has experience there. Recent endeavors include the development and management of a correspondent banking framework for a transactional bank with focus in Libya. Now, before I ask some of my questions, we received some unfortunate news yesterday as the FATF has placed Turkey on the gray list of countries. So what does this mean? This means that Turkey will be monitored more closely until taken off the list again. And I will ask our experts here to comment a little bit on how it will affect banking in general, and how it normally affects banking in general, and how it will affect banking in Turkey. So, for Salvatore, as the UK and the EU are the leading sources of many AML and FCC related regulations, what are some of the regulatory trends arising from the recent changes in the UK and EU regulation and the post-Brexit regime?
Thanks. So 2021 has been an eventful year for financial crime. As per the legal supply chain, the traditional criminal supply chains remains disrupted, with a new push from lawbreakers and criminals for new ways to launder illicit funds, new ways, new system, new markets. On the opposite sides, regulators and lawmakers had a busy year too. 2020 has been a blockbuster year for AML-related fines. The EU and UK have been particularly active. We see an increase in number of values of fines, with numbers much more closer to the US, that usually is the leading source of fines in this field. On the regulatory side, we've seen several countries like US, China, and EU introducing a major revamp of their AML CTF framework. In July 2021, the EU introduced a new AML package. This introduced several significant changes, like the creation of an AML supervisory body at EU level, or the introduction of directly applicable regulations, which is a step away from the directive system that has been used so far. I won't go in details on those amendments, because I think on a Friday afternoon, even for the most fervent compliance enthusiasts, it would be a little bit too much. What is matter highlighting, it's the reasoning behind those changes.
Of course.
On an internal side, obviously, there is a need for harmonization. Everyone in this room has dealt with different European jurisdiction. It's not a secret that some countries have been more successful than others in implementing the rules from the AML directives. So there is this need for harmonization in the system. Similarly, we have we have the recognition, the realization from the system that technological progress cause inefficiencies in the system. So we have, for example, obviously the area of cryptocurrencies, crypto assets. It's a good example of that. Both system, EU and UK, have introduced the travel rule for crypto assets, which is it's a move to comply with the latest international standards, considering the FATF issued a recommendation back in 2018. And then the major trend that we see is a major push from technical compliance towards effective compliance. This is by no means a new concept. I believe the FATF mentioned first back in 2013. Wherever we see now in the market, there is a new steam beyond a new effort towards effective compliance. This translates in two ways. On the regulatory side, we see regulation that a lot more detailed and a lot more granular and perhaps directly applicable is as the EU single rule book, which I've just mentioned, that's been introduced by the new package. On the other side, we see a regulator that is much more intrusive. The regulatory action, the regulator is much more present on the market. It makes feel its own presence on the regulated entity. In the cities, for example, we saw an inflated number of Section 166. Section 166 is like is the use by the FCA, the Financial Crime Authority, of licensed consultants to conduct an in-depth investigation on regulated entity. And we have seen an explosion of the use of this section to the point that it's putting stress on the availability of licensed consultant in that field. And concluding probably a couple of lines on UK role post-Brexit. The two system remains broadly in line, and it will remain broadly in line. Obviously, they are under the FATF umbrella. However, we start seeing the first signs of divergence. So UK opted out of from the sixth anti-money laundering directive, saying that its own framework is already in line with the latest standard. In doing so, however, it distances itself from concepts like the corporate responsibility for AML deficiencies, which is covered and has been introduced by the sixth. So already we see a sign of divergence. On the other side, on sanction side, for example, the UK, obviously sanctions becomes more and more a tool of foreign policy, and the UK obviously is keen to establish itself as an independent player. So they've started an independent anti-bribery and corruption sanction regime, which obviously distances itself from the EU.
Okay, so since you have experience in the MENA region also, what do you think the impact of such changes will have to Turkey and the MENA region, directly as counterparties to the UK and EU institutions, and directly via local regulators following the UK and EU's lead?
So the indirect impact with the local regulator following the European and British example is quite obvious, it's self-explanatory. And in terms of time frame, obviously, we are looking more on mid-term. A more imminent threat or impact, if we want, is the direct impact of regulation. and this touch also on the FATF issue that you just mentioned. So many colleagues yesterday surely in a better way than myself, explained the importance of correspondent banking and how in this context Western institutions, policies and procedures have a direct impact on local banks. So currently, both systems, the British and the European, have an high-risk countries list. The list triggers a series of prescriptive enhanced due diligence steps that needs to be taken to enter in a business relationship with an entity from any of those countries, or even to transact with those countries. The new approach, again, is more detailed and in a way more flexible. The European Union will use a three-tier system with countries with strategic deficiencies, countries that pose a threat to the European system, and countries with compliance weaknesses. Each one of these tiers will have different enhanced due diligence requirement. However, the European Commission will have the power to establish country-specific measure. This could go from prohibiting a European bank to open a branch in a country of the MENA region to prohibiting any correspondent banking relationship with that country. So it's easy to appreciate the impact that this could have. Similarly, the three-tier system, it's very likely that it's going to resemble the FATF black and grey list. So obviously, the unfortunate news yesterday, it might have a very imminent impact in terms of the burden that local institutions will have to go through to, if not establish, maintain their correspondent banking relationship. And not necessarily see correspondent banking relationship ceasing, or whether it will mean more work on this side to try and comply with the Western side's policy and procedure. On the other side, and a sort of counterbalancing this, new regulation also address the risking. Again, not a new concept. The risking is famously a side effect of regulation. So we see institutions in the Western world that prefer not to open a business channel because it's too expensive, or it's too risky and therefore too expensive on a compliance side. International community is trying to fight this. Now, the 6th Anti-Money Laundering Directive introduced the needs for Western institutions to justify when they decide not to enter in a business relationship with someone in a different countries. Obviously, the MENA region has been notoriously one of the most affected in this field. At the direct impact, obviously, we talked about the divergence in sanction regime. That means, like in the immediate terms, that we need local institutions will need to tweak their screening systems to capture both and keep up to date with both. Another factors, for example, the beneficial ownership registry. This is obviously a European institution, but it's pretty much the same as the UK significant person control regime. So it's the need to record and register the beneficial ownership of institution. the new regulation introduced the need for foreign institution which enter in a relationship with a regulated entity in Europe to comply with the registry and provide this kind of information. Again, this requirement is not to be overseen because it could be quite burdensome. I think.
You've had experience actually with Turkish banks. How, in terms of correspondent banking relationships, do you think they'll be affected? And how are Turkish banks from that point of view?
I think in the region, Turkish banks are pretty much leading the way, in my experience. I think they will be definitely effective. I mean, let's not forget, we now have a European country which is on the grey list, which is Malta. So I think European Union will have to deal with it from the inside as well. Do I believe it's going to have an effect? Yes, I do. How dramatic it's going to be? I mean, it's hard to say now. I think initially it would be definitely a heavy burden on the compliance function on this side to comply with the request of the respondents on the western side. I think that would be the most imminent impact.
Okay, thank you very much.